Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Tuesday, August 17th. What an exciting day to be alive for a whole bunch of reasons that we will dig into today. Although obviously at the top of that list, maybe fighting for the top of that list, A, that I get to be friends with someone like Alasdair Macleod, and B, that he is joining us during this exciting time in history. Now, I know the silver price has not skyrocketed just yet, although when you think about who is it that suppresses the silver price, who do they hang out with, what have they done, what is their past history, what events that we're seeing now, 9/11 coming up, warnings about 9/11, the causes of 9/11, Afghanistan and the Taliban, at least we were told. I won't claim to know exactly who's doing what over there, but we're seeing some familiar fingerprints. So, Alasdair, couldn't be a better time to have you on. We'll talk Basel III as well. But more importantly, welcome on in. And how are you today, sir?
I'm fine, and I'm looking forward to talking to you, Chris.
Well, I sure am looking forward to it as well. And how about before we get started, let's take a look at our silver price today, where we looked like the price kept bouncing up against that 23.90 level. I don't know if the CFTC condoned another tamp down by some wing of the government or the banks. We'll see when you would think maybe there would be comments soon from the CFTC. But in either case, quick note, bringing you today's episode is Summa Silver, run by Galen McNamara, who you've seen several times on the show, and I'm quite impressed with. And they identified new undrilled anomalies in soil survey on the Hughes property at Tonopah in Nevada. They've recently expanded that project. And they also had some pretty stunning drill results. So thank you to Summa for bringing us this episode. And Alasdair, how about just to start things off, especially as someone who said, I don't want to say more than I can verify or prove, but I was wondering what would happen on August 17th. I kept thinking a lot as someone who was running from the dust cloud on September 11th that something like that, of that nature, but different, but in a positive way, in ways it's like you just feel sometimes. But how about we start first with actually letting people hear what Nixon said 50 years ago on August 15th. It's about 4 minutes long. So is that okay if we play this first and we can both hear it again too? Because it is pretty stunning what he actually says.
Yeah.
The third indispensable element in building the new prosperity is closely related to creating new jobs and halting inflation. We must protect the position of the American dollar as a pillar of monetary stability around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them.
Yeah.
The third indispensable recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what does this action, which is very technical, what does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you want to buy a foreign car or take a trip abroad, market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today. The effect of this action, in other words, will be to stabilize the dollar. Now, this action will not win us any friends among the international money traders. But our primary concern is with the American workers and with fair competition around the world. To our friends abroad, including the many responsible members of the international banking community who are dedicated to stability in the flow of trade, I give this assurance. The United States has always been and will continue to be a forward-looking and trustworthy trading partner. In full cooperation with the International Monetary Fund and those who trade with us, we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest. I am determined that the American dollar must never again be a hostage in the hands of international speculators. I'm taking one further step to protect the dollar.
Now, Alasdair, we'll pause there and continue if you'd like, but as I'm listening to that little order, he mentioned inflation, and that was when gold was $35 an ounce. It's now $1,800 or something like that. He talked a lot about defending the dollar and the United States, but he didn't talk much about the American people. He talked about supporting American workers, which if you destroy the value of what they had, they'll have to work a lot more. We saw people, two parents going into the household, stagflation. Same era when the CFTC comes along, when futures contracts come along. It's almost like we veered off into some nightmare Biff's world from Back to the Future 2 over the last 50 years. And now whatever they've been spending trillions of dollars on, which we can't get an answer from George Bush, even 20 years later, seems to be unraveling. So please take it away. And any thoughts? I don't know what to think. So what is going through your mind right now?
Tricky Dicky, I think is the answer.
Known as Tricky Dick, also got caught breaking into Watergate. I mean, what if this guy was just lying directly to set us up to believe a lot of stuff, to accept a lot of falsehoods that were on the way?
Well, what he was saying was complete political rubbish. We had a prime minister a little bit before you had Richard Nixon called Harold Wilson. And his chancellor was a guy called James Callaghan or Jim Callaghan. Now, Callaghan was forced into the position by Wilson to devalue the pound. I can't remember the year, it was something like 1963, round about then, by something like 20%, I think, against the dollar being, you know, if you like, the standard, backed by gold, against which other currencies fix themselves. And you know, when I was listening to Tricky Dicky, I was sort of remembering pretty much what Harold Wilson said. You know, the bit about how, you know, effectively what Tricky Dicky was saying was that the dollar at home will buy you exactly the same as it always does. It's just if you go abroad and you buy a motor car or something like that, you might have to pay a little bit more. The way Wilson put it was, he said, the pound in your pocket is untouched. It will buy exactly what it did yesterday. And of course, I mean, you know, the problem started really from there. I mean, what we're looking at there is a government in complete denial of the problems that their monetary policy has actually created for itself and its citizens. And I mean, this happens every time. I mean, really, there's nothing new in it. So yeah, we see this as an anniversary. Indeed, I'm penning a piece at the moment, which goes back to August 71, and looks at the loss of purchasing power for the dollar and basically measured against gold. And there is nothing actually that you can use to measure the loss of purchasing power of the dollar better than gold. You've only got 2% of 1971's dollar left in terms of purchasing power. And that's what's happened. And it's continuing to happen. And not only that, but your delightful Fed is printing money at an even faster rate. And of course, it's not money, it's currency, or you could actually, the correct definition of it is credit. Those dollar notes, those nice green notes you get, actually are a liability of the Federal Reserve Board. It is credit. It's not money at all. And it is credit just the same as if you put money into a bank or you have a bank balance as a depositor. That again is credit. It's not money. So we live in a world which has actually moved away from the sort of just a tiny bit of underpinning, like central banks and organizations like the IMF and the World Bank and so on and so forth could exchange their dollars for gold, but nobody else could. That very merest bit of underpinning of the dollar went in 1971, August 71, with that Nixon shock. And since then, I mean, currencies have virtually disappeared in terms of what they can buy. It's a fraud perpetrated on the people, on their earnings, on their savings. It is a benefit to borrowers. So it has encouraged profligate spending out of borrowing, and it's encouraged malinvestment, people borrowing money on the basis that they know that when they repay it, they won't have, in real terms, they won't be repaying nearly as much. So the question is, let's borrow it, and then we'll work out how to get a profit out of it. In other words, the sort of, industrial businesses ended up doing sort of quasi-banking for, activities. Because what is a bank? A bank is a dealer in credit, basically. It's got credit on one side and credit on the other. So, when you're a manufacturing business and you see that you can borrow money and taking into account the interest cost, the repayment value is less, including that interest cost at that point in the future when you have to repay it, then you effectively get into banking. You borrow in order to strip out that benefit. And the malinvestments that have accumulated in the last 50 years are very, very substantial. And we've got to the point where the Fed now has an enormous problem, and they're trying to deny they've got a problem exactly the same way as Tricky Dicky did. What they're saying is, we don't have inflation. It's temporary. Yeah, and they can see also that the US economy is not growing as fast as they thought it was, maybe 20 minutes ago. So they're going to argue at Jackson Hole, and this I'm absolutely certain, they're going to argue at Jackson Hole that the economy is slowing down and therefore there's no need to raise interest rates. I mean, they are pushing a line which is the only line they can push and remain in position. Because as soon as they admit that they have got this one horribly wrong, the whole system falls apart. So that's actually what we're looking at, Chris.
Now, I agree with everything you said there. And I'll just say, I wonder if we're not seeing it falling apart in front of our eyes, because the other part of what Nixon did back in 1971, which I know you've written about many times, is that they put on price controls. Now, what I'm wondering, I'm guessing many people don't know, I actually read one of Dick Cheney's autobiographies a couple of years ago. I have some weird hobbies here, I'll admit, but it was stunning because he actually writes about when they said there were price controls, how they decide what the price controls are. Turns out, would you like to take a guess at two of the people who were involved in deciding how much? I think the examples, they even talked about, toupees should go up this much, dill pickles should go up that much. Would you like to take a guess at two of the people who were determining that?
I wouldn't have a clue.
What would you say if Dick Cheney and Donald Rumsfeld, he describes this in his book, and I'm picturing like a bunch of middle-aged white guys chain smoking cigarettes, like the cigarette smoking man in X-Files. Then let's
keep the price of cigarettes down. Yeah.
Then a couple of years later, you have September 10th, 2001. Donald Rumsfeld announces that the Pentagon had lost $2.3 trillion. They don't know what happened to it, American bureaucracy. The group that would have done the audit happened to be in the section of the Pentagon that got blown up the day after. We never saw a photo of a plane part or a video of a plane. Now, somehow last week, they released new footage, which could have been a coincidence. And then let me pull this up. Perhaps what really has had me thinking about this a lot, here's last Monday, U.S. reviews 911 documents for possible release after families tell Biden to skip memorial event. Now, I wonder if they told him to skip it or said, we don't want you there, because at least I'll speak for myself as someone who was actually within feet of being caught in the dust cloud. And then someone let me in their car. I'd like to know what happened, whether my health is at risk. Maybe some of the times people see me cranky. You know, I went down there and was breathing that stuff for months later after that. So I don't know, maybe they said to skip it or said, unless you're the Department of Justice pledged on Monday to conduct a fresh review. Okay, so Department of Justice just last week deciding a fresh review of which documents for public release after years of pressures from victims' families to disclose the information, which that I can understand. Why they haven't been able to release any of it, I can't understand, or actually I can understand now. And then this was Monday of last week. This wasn't today. Then all of a sudden on the 50-year anniversary of the Nixon Shock, we have something that looks like the Iran embassy being stormed in 1979, which I might add was a key trigger, not in my words. You can tell me if you agree with this or not, but the books I've read about the Hunt brothers, they actually cite that as being more of a driver for pushing silver up. Because keep in mind, the Hunt brothers weren't trying to corner gold, and gold went to 850. So it's like when you actually dig into the details, you pointed out the different words, money versus currency. We know these guys are lawyers and use legal tricks. What would you say to any of that?
Well, it's very hard to sort of, draw any conclusions from everything that you've looked at there. I mean, quite a lot of that I'm not familiar with anyway. And I just try and look at the sort of economics of it and the broader geopolitics, if you like, of what's going on. And I think in that sense, there's a far greater relevance to what's happening in Afghanistan today than what happened, say, at 9/11 and, if you like, the implicit involvement of Saudi officials in the Twin Towers and all this sort of stuff. The fact of the matter is that America decided to go after bin Laden. Bin Laden was a senior figure in the Taliban or running it or whatever. And that meant invading Afghanistan and trying to take him out. They didn't manage to take him out. They didn't even manage to find him. That happened later. But meanwhile, they committed themselves to a war which has cost over $2 trillion, from what I'm told. The problem, I think, that arose from there is that as America got bogged down in this Afghan situation, China and Russia had been building the Shanghai Cooperation Organization and turning it from, if you like, a security-based organization into an economic bloc. The members are sort of cooperating, not just in terms of controlling terrorism, but the control, if you like, cooperating on an economic basis. And this now covers 40% of the world's population. And what we're looking at is something that has emerged into a central focus point for the control of the whole of the Eurasian continent, satisfying something that Mackinder came up with way back in a paper for the Royal Geographic Society. I think it was 1905, with the follow-up in about 1912, where he described the Eurasian continent as the world island. And he who controls the world island controls the world. That was his conclusion. Of course, everybody forgot that because America emerged as the world dominant power, et cetera, et cetera. But it's going back into Mackinder's original thesis. Certainly the Russians are very much aware of this, and I understand the Chinese are as well. If you like, the hole in this whole argument, the black hole in the whole of this argument was Afghanistan. The Russian and Chinese approach as, if you like, partners in sharing power over the whole of Asia, or having Asia in their sphere of influence, that's the better description. Their strategy was just to watch America tie itself in knots. plus, of course, America's allies, the Five Eyes, and particularly people like we Brits, Australians, New Zealand's, and to a lesser extent, considerably lesser extent, the Europeans. And basically, what happened, I think, a bit over a month ago was that China and Russia had a meeting with leaders of the Taliban, and this was at a regular Shanghai Cooperation Organization meeting in one of the Central Asian capitals. I can't remember which one it was. And from what I understand, the deal that was hammered out was, look, we will trade with Afghanistan. We will do what we can to support Afghanistan on the basis that you, Taliban, ensure that no terrorist groups use Afghanistan as a springboard to launch trouble in the neighboring nation states. And these are obviously China itself and the various stans, like Kazakhstan, Kyrgyzstan, and all those. So you can see what's happening. So the importance of what happened in Kabul literally yesterday is that America has been chased out of Asia, full stop, gone. So in the geopolitical war, in terms of boots on the ground, America is out of it. So what we have left is, I think, a technological war and a financial war. So we've got to watch how the situation evolves in that context. Now, I have to say that on the technology side, America is still pushing on other nations to not use Huawei for 5G. And I understand that they have gone to Brazil and they have threatened Brazil with hell and damnation if they sign up with Huawei. Now, Brazil is relevant because it is one of the BRICS, that's the B of the BRICS, which China has a very special and improving relationship with, trade relationship in particular. So that is a thing which I think is likely to backfire on the Americans, because countries like Brazil, I think, are becoming more independent of American influence. I mean, they see Joe Biden there, and I don't think that's the best situation, if you like, for outside observers of what's going on in America.
Alasdair?
Yeah.
You think they saw one of Joe Biden's press conferences and that's why their gold reserves have surged nearly 100% in 3 months? Could there be a connection, you think?
Well, I don't think I'd make quite that connection, but I think it rather supports the thesis that Brazil is looking at the overall American situation, which includes the dollar.
Yes.
And that is the point. That is the point behind behind your question. And it's also the reason that India, in particular, I mean, India has always been a sort of neo-Keynesian or socialist first and then neo-Keynesian. And they have never really gone out to buy gold. I mean, the citizens do, and they try and stop their citizens from buying gold because they see that any trade surplus just gets invested in gold. And as far as they're concerned, that was a waste of money. But guess what? Now that they are on the cusp of joining the Shanghai Cooperation Organization. I mean, they're already, I can't remember whether it's a dialogue partner or an associate, but anyway, they are in there and they will be joining it. Guess what? Suddenly they've got their gold reserves up to 700 tons. Yep. Now, I don't know that they've got all that, incidentally, because they bought a slug off the IMF going way back to the time of, I think it was 2011. It was after the Lehman crisis, when the G20 persuaded the IMF that they should let some gold go in order to finance improvements for the nations that have suffered from the Western banking cartel's failure, sort of thing. India, I seem to remember, bought over 200 tons. Now, I doubt whether that's ever been delivered. I would have thought that it's probably still drilling around in various central banks' basements. in the West. I mean, whether it's at the Fed or whether it's, the Bank of England, whether it's there or not, probably not, because on a completely different subject, remember that a very respected analyst, Frank Veneroso, calculated that by 2002, when he made a speech to this effect in Lima, somewhere between 10 and 16,000 tons of central bank gold had been leased into the market and was probably ended up as jewelry around Asian ladies' necks, And that was 2002. That was 19 years ago. So what they've done since then, they certainly haven't got that gold back. If anything, I think the leasing situation has probably continued, because we know that there have been attempts from time to time, very obvious attempts to suppress the price of gold. And this can only have come from exchange stabilization funds, for example. Or put another way, the US Treasury or the UK Treasury or whoever it might be. So the situation as far as Brazil and India and all the rest of it are concerned, I think is reflecting this drift away. We've passed peak America, if I can put it that way. And I think in geopolitical terms, we're entering a new world. And that, I think, is the key point about Afghanistan's falling for, Taliban control. Apparently, there are only 75,000 Talibans out there. And how many hundreds of thousands of troops did they take out? This is a very well organized takeover, let's put it that way, or putsch of Kabul, the whole of Afghanistan and Kabul, very well organized. So I would guess that after all the sort of initial problems, there will be the unpleasantness that goes with, wild troops, if you like, stealing, raping and women's rights going down the toilet, whatever. All that nasty stuff will happen, believe you me. But I think some of the worst excesses that we expect and people expect, I don't think are likely to happen. I think they are a lot more under control than they have been in the past. And I would refer to the relationship with China in particular. China will be in there investing. Now, call it investing. They will help rebuild the economy. And I think that's important to understand. So it's a new world, Chris. It's a world where America's influence is declining quite rapidly. And of course, this has implications for the future of the dollar as the central currency for all the other fiat currencies.
Yeah, I really agree. Although maybe with one twist, I wonder if it's not America that's going to struggle, but the type of people that run the US government. And I guess we'll see in time. Although, Alasdair, to perhaps put some background on why I've been thinking about some of these things, it's like we really don't know what the Fed's doing behind closed doors with however many people are in there. And the other night, I just happened, to look some of the places where they don't, I think, expect us to look. Found a couple interesting headlines. I'll pop up here. This was interesting. Thursday, July 1st. So about 2 days after that Basel III thing, we have 3 arrested for orchestrating multi-million-dollar silver lease investment fraud. So basically they explained silver leasing, or maybe they read one of your articles where you explained it. And in either case, July 1st, 2021, we have that. Now, we've also seen a lot of the gold and silver traders actually get sentenced to jail in the past 2 months. Is it at least possible that maybe the Department of Justice is doing something and they haven't told me about it? I'm now opening my mind to that possibility. Here on the Fed's website, Federal Reserve Board announces the individual capital requirements for all large banks effective October 1st. I might add October 1st, not only the start of the fourth quarter, but at least I heard yesterday, I believe is accurate, start of US fiscal calendar. We have this one. Federal Reserve extends comment period on proposed rule to govern funds transfer over the Federal Reserve Bank's FedNow service. And of course, this one caught my eye. So on August 5th, of all times, Federal Reserve Board announces termination of enforcement action with JP Morgan. And this is, I don't know what to make yet, but basically they're describing how, JP Morgan was essentially under probation with their deferred prosecution agreements. And of course, in that time, this goes back to, I think it's 2015, JP Morgan conducted FX activities. Some consider gold and silver currencies. I've called them money like you did, but 2008 to 2013. So they got caught. They got caught by the CFTC. They got caught by the Department of Justice. I've heard certain things about that whole case, some of which I cannot say on the show because it would not be safe. So there's other things that I leave aside, and I'm not sure quite what to make of it, but 2014, the bank consented to the issuance of an order by CFTC. This is kind of weird, especially there's still the Michael Novak, some of those guys on the LBMA, and why the Fed would be terminating its review, as it certainly appears as if. And again, I maybe just one last thought, and then you can take it from there. Let's say in any institution, there are people who become corrupt, but also people who have a good integrity and see they become corrupt. Sometimes people change sides, as happens in life, but I just factor in, I don't have the first clue right now who did what in Afghanistan. I'm still figuring out what actually happened the day I was running from the dust cloud on September 11th, and we see how many differences of opinion are. Mm. So if there's a question in here, now I'm thinking back to Basel III and the way I've heard it explained by certain people that wasn't supposed to be bang, we're off, but a lot of stuff happening now, and I'm seeing a lot of things scheduled to go into effect October 1st. So I'll maintain what I said the last time we talked. Just because I don't know the exact plan, do I see that we could be in the middle of the reset right now, especially given everything that's happened in the past week that we've just been talking about?
Yeah, I think it's a difficult one to understand. I think the only way we can approach this is to put ourselves in the shoes of the people who are trying to, if you like, manage your country's money. And they have got a number of problems. The first one, I mean, let's go to Basel III. The first one was that the G20 instructed the Bank of International Settlements to introduce reformed Basel regulations so that something like the Lehman crisis was not going to happen again. That led to Basel III. Now, central to Basel III is the definition of high liquidity assets. And the other thing was this net stable funding ratio, which ensured that basically long-term assets were properly financed, and there was the liquidity on the liability side of the bank's sheets so that they could hold illiquid assets, if you like, without imparting systemic risk into the whole of the banking system. I mean, it really is as simple as that. Part of dealing with this was to get the unbalanced derivative position under control. Now, there's something like $570 trillion worth of OTC derivatives out there. And incidentally, the total of precious metal derivatives are less than $1 trillion of that. I mean, something like 800 billion. So we're talking about a far bigger picture than just precious metals. That has now come in to America as of the end of the last quarter. It's also come into Europe, and it's also coming into us, basically in the UK, this is, at the end of this year, technically from January the 2nd next year. Now, the idea behind this isn't that, you suddenly have to, okay, the rules are coming in tomorrow, we've got to close all our unbalanced positions, like that. No, what happens is that after the rules come in, then a bank that maintains unbalanced positions ends up with a balance sheet which could be more effectively financed, if you see what I mean. So, nobody's turning around to the banks and saying you can't do this. What they're saying is you can do that, but you're going to be running your balance sheet inefficiently if you do so. So what Basel III is relying on is for the bank's treasury department to turn around and tell the bank's directors, look, we have got uneven positions in dump, 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 and it's chewing up our available stable funding. We have got to reduce this so that we can release available stable funding for more profitable activities. Yeah. So this is not, this isn't sort of boom, suddenly $5,000 silver because everybody's got to close their positions and all the rest of it. But what it does do is it brings the banking system under pressure to reduce their unbalanced derivative positions. And it's not just OTC, we're also talking about regulated derivatives such as futures on COMEX. But it does leave banks with a problem. It's less of a problem in silver at the moment because the position is far better balanced. But if you look at gold, the position on COMEX is that the swap category, which is comprised in the main of bullion bank trading desks, is net short something like $25 billion. I mean, it's quite a significant amount. It works out on a net basis at slightly less than $1 billion per swap. If you look at the bank participation reports, you can actually, sort of extract a bit more detail and remove from if you like, the swaps, the swaps that aren't bullion bank trading desks. So you can see that actually the position that these banks are in, they've got a hell of a lot of open positions to close. And of course, these open positions are always net short. Now, last week, was it last weekend or the weekend before? I can't remember. Anyway, very recently, we had that knockdown, which, happened overnight on a Sunday night, our time. It was, it must have been sort of early evening, your time in America. And it was in the small hours of the morning in Asia and also in Europe. There was a public bank holiday in Japan. There was a public bank holiday in Singapore. What a wonderful time to hit the market with, people tell me it was about $4 billion worth of derivatives, bang the market down, nobody around to buy it. And so, the fall from the previous day extended to a fall of $120 or whatever it was. And we woke up in the morning sort of shocked. I wasn't shocked. I was not surprised because they had to try something like this to try and close down these positions. But it completely failed. And the thing that's fascinating about it is that if you look at the commitment of traders reports for that Tuesday, you see that if you like, the bots in the managed money category sold short 33,000 contracts. So what they have done is that not only have they failed to knock the price and keep it down, but they have created the feed for a bear squeeze, which is going to push the gold price significantly higher against the bullion bank trading desks who are already short the thick end of $25 billion. So, this, I think, is a reasonable parallel to what happened last March, when they got open interest on COMEX down from just under $800,000 down to, I think it was around about 500,000, contracts, down to about 500,000 contracts. And then, of course, the price took off from 1480, something like that, and ran up to 2075. I think we've got a similar situation today on a knockdown, which actually failed considerably more rapidly than the one in March 2020. And this, of course, has implications for silver. Now, silver, I've taken a different view. There was this sort of push way back in late January to, sort of persuade the Robin Hood crowd, as it were, to go out and buy SLV or one of the other ETFs, in order to accentuate a shortage of physical silver in London, also on COMEX. But the problem with that is that when it fails, and again, it was, the establishment, if I just call it the establishment, made sure it failed. I mean, there's no two ways about it. This was jumped on by the establishment to prevent the situation getting out of control, okay? Tricky Dicky, if you like, in action. Let's put it that way.
The Friends are still in power, so it would make sense to me.
Yeah, anyway, basically, once those weak holders realized that they were on a loser here, then you created weak holders. I mean, the Robin Hood guys, they weren't suddenly sort of seeing a $60 silver price. They were seeing a sort of $25 and $24 and so on. So that, I think, has meant there's a bit more stock around, if you like, physical stock in London than there is in gold. What's happened in gold is that you've got a feed coming in the whole time of 9-10 tons every business day coming into the London market. So in the absence of anything else, you'll tend to see the price drift, particularly at the time of the fix when this gold tends to get cleared. But what's been happening, I mean, on the knockdown, you find that India, Brazil, and various other unmentioned central banks say, whoopee, come on, we'll have some of that. And they're taking out the physical. So every time they bash the price, they're making the situation worse for the establishment, for the established bullion banks. And this, to me, I mean, when I woke up in the morning and saw that the price had gone down to 1680 or something, I rejoiced, because what an opportunity. I mean, I take the view that I don't trade gold and silver at all. What I do is I accumulate it, and I accumulate it because I know it's sound money. And I accumulate it in preference to having wildly overvalued assets in fiat currency, and at the same time, fiat currency itself being wildly overvalued. The only place to go is physical gold and silver if you want to hedge yourself out of a system that is patently failing. And this is the big message, I think, behind what's happening to the dollar. I mean, if I can go back to what we were talking about earlier, if we see end of empire beginning to happen, and we saw how quickly this happened in Kabul, the decline of the American empire will also be manifest in the decline of the importance of the dollar, the decline of the purchasing power of the dollar. Certainly in terms of commodities, not necessarily in terms of other fiat currencies. So what do? How do you protect yourself against this? You don't trade gold and silver. You don't invest in gold and silver. You hoard gold and silver in order to preserve your wealth and have something to spend when the purchasing power of fiat currencies actually more or less disappears entirely. And that's where we are today.
Yeah, well, it makes sense. And I get it that, we're all ready to accept changes like this at our own speed. And that's fine. Although perhaps maybe to help people who are ready to at least consider the possibility, you mentioned the short position. And I ask you now I got my mouse here on this red line, which is the commercials. So here we have, you see that box in the upper left in yellow, it says June 14th. And about halfway down, COTLC, and there's a C in parentheses, and it's negative 71,004. You see that there?
Yep.
So if that's the short position of the commercials on June 14th, 2 weeks ahead of the Basel III date, which you explained in great detail then and have followed up now, and you said you were just talking about holding gold, not trading it. And we see now that's 71,000 down to 39,000. That's 30,000 contracts. That's 150 million ounces of digital silver or contract silver. So could one say that it's not just you saying the benefits of holding gold, but at least now we don't know. Maybe they'll short the heck out of it tomorrow. But when we look at all these things that are happening and then consider that you have the debt ceiling, which I would say some accountants could technically say that it was in default on August 2nd, because here's in Janet Yellen's own words. Look at this one. As she said, as I said in my letter on July 23rd, so apparently she wrote a letter saying it. She's writing this other stating it now. Increasing or suspending the debt limit does not increase government spending, nor does it authorize spending for future budget proposals. It simply allows the Treasury to pay for previously enacted expenditures, money they've already spent. Failure to meet those obligations would cause irreparable harm to the U.S. economy and the livelihood of all Americans. So that sounds like a threat that basically they've already defaulted, yet if they can't stiff arm Americans into supporting Congress, into allowing them to steal more money. But so that sounds like accounting fraud. I'm sorry, I didn't have it pulled up, but I think I'll pull it up now. It's so people can see that if they want. But when we see all these things happening, is it possible that maybe if Janet Yellen, who was there for Obama, I'm sure was in the system when George Bush was around, let's say hypothetically, just using our imagination, some hypothetical possibilities, let's say there was a general good side and a bad side. I would put Dick Cheney, Richard Nixon, a lot of these guys who love blowing things up, stealing money, and then never answering, the nameless they don't tell who's on top. Let's lump Janet Yellen, Joe Biden, Ben Bernanke, Jerome Powell in there. You can change your own model. But if they were stealing money and they were using the printing press and it was just accelerating and creating wars and saying there were weapons of mass destruction in Iraq, when not only did it turn out they weren't there, we saw later them confirming they knew damn well it wasn't there, which kind of makes me think that was murder or genocide. And then here, Janet Yellen is saying, we already spent this money, and if you don't raise it, we're going to get caught. So it sounds like they've already defaulted, and unless they can con the world into raising their allowance again, which would sound like accounting fraud, then tack on, what do we have here? Most GOP senators sign pledge not to help Democrats on debt ceiling. Okay, that doesn't sound good. Now, moderate Democrats tell Pelosi to pants down, threaten to hold $3.5 billion budget. Alasdair, what does that support what you've been saying? Is that in line with what you've been saying? I don't want to put words in your mouth, but I know there are people who are upset Basel III date came and went. But if we take a step back, in the same way Nixon didn't just get on TV and announce that, there were lots of meetings to plan it. And when you look for the signs and the evidence like a forensic scientist, I can't say I can tell you exactly the details, but I was telling people I thought you were going to see the opposite of 9/11 on August 15th, days before it happened. So I would say that I think what you've been telling people for a long time is coming true, maybe not on the time schedule every person interprets, but what would you say there about any of that?
Well, about the debt ceiling, I think the first thing I would say is that this must be, 70th or 80th time they've raised the debt ceiling. So, I mean, there's nothing new in that. And I'm sure that if you refer back to the correspondence from the Treasury Secretary to the President or whatever, on those previous times, you'll find that there's a similar story. I mean, they've probably got a photocopier in the office. They just photocopy the earlier one and I'll just sign it. I mean, it happens that frequently. The whole of this debt ceiling thing is, it's craziness. I mean, it really is. It hasn't stopped. It hasn't done what it was meant to do, which is, if you like, hold the executive to account when it comes to spending, and to ensure that they don't overspend. Give Congress the chance to come in and say, no, come on, this is just not on. And of course, nobody's going to stand in the way of the Treasury paying people who've already been contracted to do this, that, and the other thing. I mean, so that will pass through. I mean, I think that's one thing we can bet on quite easily. As for the rest, I mean, certainly you do get these sort of, an awful lot of planning goes into almost every public announcement. I mean, it must do. And there will be a lot of discussion in committee about, what is the likely effect if we say this, say that, and all the rest of it. I think the point behind this, and I've spoken to politicians in this country really on this very, very subject, they don't actually, in conducting those meetings, they don't actually think through the sort of deep questions which you're raising. I mean, the one very deep question, which you haven't really raised, but you have indirectly, is the printing of money, the effect that that has on the existing stock of money and its purchasing power. Now, partly this is because, we're all neo-Keynesians now, at least in government they are, and they daren't think otherwise, because if they thought otherwise, they'd think, oh my God, how can I do this job? So they are neo-Keynesians. I mean, we just have to accept that. And this means they don't consider things like printing money actually is taking money away from the people we're meant to be helping. The widows, if you like, the retirees living on a small pension, the low paid who we're meant to try and help as much as possible. I mean, we're really stiffing them on this. And the idea that you can somehow get round this by having these stimmies, if you like, it actually just begs the question. But you can see how it is that you can get a committee discussing these things, deluding itself. You've got the sort of, sort of a crowd effect of everybody thinking in the same way and also protecting their own backs in the argument. And it's the sort of thing whereby, sort of if you go back to, caveman, if your cave was invaded by, a dragon or something like that, the first thing you would do is you would all huddle together, having some sort of belief that you're better together than separate. And only at the last moment, and probably when it's too late, you break apart. And so you've got this sort of approach in government all the time. And they can't get away from this basic human response. Them and us, we are the committee. We need to protect ourselves first and foremost in doing our job. And that's the way it is. And this is why you get this sort of behavioral thing. I mean, you were talking earlier about, the Fed stopping, its investigation or whatever it was into JP Morgan. I mean, these guys are all on the same side. And when things are getting sticky, and they are getting sticky, they're getting sticky because prices are rising and the Fed is hoping that rise will stop. And guess what? You've got all these guys in the same room convincing each other that it's all temporary. And what do we get? We get the only answer that can possibly come out of the Fed about rising prices. And that is, this is not a problem. I'm going to do this. See no evil. Nope. That's what happens when you get a government committee. It's not a question of an individual being evil or anything like that. It's hardly even a question of an individual being incompetent. It's that mass psychology that you get in a committee, which is on the back foot the whole time. It must try and protect itself first before it does its job. That is the reality of the situation. And the banking situation, I think, is getting very precarious. I mean, we've seen that the banks are under attack from Basel III. I mean, guess what? If you look at the banking situation, I mean, since really only 10, 15 years into the freeing of the dollar from gold, you had the Big Bang in London and you had the end of Glass-Steagall. And the result was that banks moved out of lending money almost exclusively to non-financial businesses. They started lending increasing amounts of bank credit to financial businesses. And the growth in lending to non-financial businesses has basically slowed to a crawl. So what we have really is we have peak banking. They've moved from what they originally were doing into a new activity, which is entirely financial. And now that's being stopped. So we're seeing huge, great changes, not just to the dollar, but the way the whole of the fiat currency credit system actually works. And then we've got something which people are calling Basel IV, which is the treatment of risk-weighted assets. Now, I'm not going to go into that in detail, partly because I haven't really examined it in detail yet, but it is clear to me on what examination I've done of this Basel IV that banks are going to have to carry more capital. Now, the best banks in the world at the moment as a group are the American banks. That is clear. The level of gearing is around about 10 times, something like that. But when you look at the level of gearing, say, in China or UK or Europe, it's considerably higher. And Europe is particularly high. I mean, there's some GSIBs out there with balance sheet gearing, sort of looking at nearly 30 times. These banks have got to raise capital under Basel IV. Now, how do they do that when the gearing on their balance sheet is so great that their shares trade at a substantial discount to book value? I mean, like under 50%. And this isn't because these are fantastic value. It's because the market is telling us that these banks are at serious risk of going under. So that may or may not happen. But how do they increase their capital in line with Basel IV when the share price is well below the implied book value of equity on the balance sheet? You know, this is going to be a real crisis. And Basel IV is not meant to come in, I think, until the end of next year. I think we're looking at 2023. But you can see that the pressures are building the whole time on the fiat currency system. And I'm sort of, I think the thing that's going to trigger it is rising interest rates, because you can't have a loss of purchasing power of fiat currencies without interest rates rising. Central banks can suppress it for a time, but they can't suppress it forever, ever. So either the purchasing power of the dollar falls more rapidly, or the Fed steps in and agrees to raising interest rates. So how much? Well, I mean, that's a very good question, which I've asked myself, but I think what we're looking at is not just 1 or 2%. What we're looking at is a situation where, according to Shadow Stats, they reckon that prices are rising at around about 13.4, 13.8% or something. I mean, it's over 13%. So while I don't think it would be right at this stage to claim that interest rates should rise to discount that sort of rise in prices, or rather fall in the purchasing power of the dollar, we're looking, I think, at something between 5 and 10%. Now, so what does that happen? What does that do to financial asset values? Well, for a start, it screws US government finances big time. And secondly, it screws the US stock market big time. And by screwing the US stock market big time, it screws everybody else's. So you're going to have a virtual collapse in financial asset values on the back of rising interest rates. Okay, what does the Fed do? Well, we're talking about, at the moment, everybody seems to think that the Fed, including members of the Fed itself, should plan to reduce its, taper its QE. But what is the purpose of QE? The purpose of QE, quite simply, is to support financial asset prices. So under the scenario that I'm describing, they must increase QE. You won't have QE at 120 billion. It'll be at $250 billion a month. So, there is no escape from this current situation. Now, go back to imagining you're a member of the Fed, the FOMC. How do you feel about this? How do you feel about dealing with this situation? You're not a happy bunny, I tell you. It's not a nice position to be in. It is awful. So, going back to that, caveman mentality, what are they doing? I mean, look at it another way. It's rather like, when the Red Indians are threatening the the wagon, the wagon train, it gets into a circle and tries to protect itself. And that's what they're doing. That is exactly what they're doing. So I see every indication that this whole caboodle is on the edge of a precipice.
Yeah, I think your dog agrees, and he doesn't want to see any more quantitative easing. I can hear him barking about that.
I'll shut him out.
I'm excited for the press conference where Jerome Powell. Alasdair, are you logging in for this one? I'm going to hop. Maybe I'll take my phone down to the pool, see if I can get a question, because you said, what are they going to do? My best guess would be buy silver and gold. I mean, it's not an accident. Central banks around the world are setting records for buying gold, and we know how the bankers always front run their own constituents, customers, and clients. So maybe Jerome will comment on that.
No, he won't. He won't. And if anyone asks him a question about gold, he'll duck it.
Well, and although maybe that's why some people are thinking about getting rid of his fraudulent appearance. Although Alasdair,
no, I can't, Chris, I can't go with that, because, you need someone in there who keeps the illusion going. And that actually is Powell's primary function. Nobody dare admit that the whole of monetary policy is based on complete fallacy and needs to be, what do? Stand back and just let the world fall apart? Then they don't have a mandate to do that. I tell you, these guys are in an extremely difficult position. I don't necessarily feel sympathy for them, but they are trying to do their best in an impossible situation. And, corral those wagons, keep the Indians out. I don't mean to be racist, but I hope that's not taken as racist. I'm talking in cowboy language, if you like.
Yeah, I get what you're saying, and I guess we'll see. And maybe October 1st would be a fun day to plan to have you back on the show when that fourth quarter, a new fiscal calendar starts, and we'll see what the world looks like by then. And I agree that for their illusion, they have to pimp this knucklehead out there. Although I guess what just keeps running through my head is whatever is happening in Afghanistan, a sign that I don't think the world is going to fall when the dollar falls. I think we're going to be liberated. And perhaps just in wrapping up, a few last ones before you can let folks know where to find your great research. Maybe just in terms of signs I've seen that are unusual, and we'll just share for a chuckle. Here I am Saturday night recording day probably 60 or so now. Ever since I came to Mexico, there's nightly lightning that reminds me of the finale of a 4th of July fireworks show. So here I am sitting on my balcony recording a short video as the lightning, it was even more intense last night. Looks like flare bombs going off. And then I was rather shocked. You see, I posted this August 15th, but when I was recording it August 14th, possibly even at the exact time, the Lincoln Memorial was getting struck by lightning. It kind of reminds me of Back to the Future 2, where Tesla oil, other signs of the apocalypse before we wrap up. Palantir invests in more SPAC companies, buys 51 million in gold bars. Barron is also even reporting silver prices are set to rally again. Here's when you should buy. Of course, they did quote Jeff Christian, so let's take that with a grain of salt. But here, back in, for anyone who's wondering, is this conspiracy theory? I would say absolutely. Here's Justice Department, May 15, 2015, talking about the 5 major banks that agreed to a parent level guilty plea. Of course, JP Morgan doesn't want to be left out there. And the charged conspiracy fixed the US dollar, affecting currencies. Alasdair, I've heard some people refer to gold and silver, rightly or not, as a currency. And here we see there was a conspiracy to rig it. Here, jury convicts 2 former Wall Street bank traders of wire fraud, also on the same day that the Fed stopped their investigation of JP Morgan. And let's see, I think that was about it. Oh, yes, there's the Bush and bin Laden family, longtime business partners. But most importantly, Alasdair, can you let folks know where they can find you and get access to your incredible research so they can stay posted? And I see you've explained why we haven't heard from Rostin Behnam of the CFTC. He's big on that climate change, guy, so maybe he's busy with this, but can you give us a preview of what you've been looking at these days?
Yeah. Well, firstly, you'll find my articles. They're posted on Thursday on goldmoney.com, and you hit the research tab. And they come out sort of Thursday early afternoon Eastern time. So that's that. And I also do a market report on the Friday, which I write in European time, obviously, because that's where I am. And that again comes out in the sort of Friday afternoon. What I'm writing at the moment is about debt, the debt trap which we're in. Might horrify you to learn that if you take all the debt in America, and that's a combination of bank credit, which is debt. It is borrowing from the private sector, borrowing by government, both government and state. We're looking at a total level of debt of around about $100 trillion in America now. So just imagine what happens with 1%, 2% increase in interest rates. And then imagine that actually we've got a rate of price inflation which is well over 10%, which basically means that interest rates should be considerably higher than, let's say, 1 or 2%. Don't know where they would go to, but somewhere between 5 and 10%. And then imagine what that does to US borrowing costs. And clearly, it would drive the whole of the US into a massive debt trap. And the only way to deal with it is to just print more money. So that, if you like, is what I'm writing about at the moment, and that'll be published on Thursday.
Well, I'll be looking forward to that. I sure appreciate you joining me again here today. It's always just incredible when you come on the show. I know people love hearing from you, and I think it's going to be an exciting time with a lot of good news. We'll see how it happens, but my guess is by the time we're at Silverfest or October 1st, I think Silver fans will be happy. We'll see how it unfolds, but Alasdair, thank you again, and look forward to your column this week and checking back in with you again soon.
That's very much my pleasure, Chris. Thanks for having me on.
All right, and we